Hey, everybody, and welcome back to another episode. I'm your host, Brandon Cobb, and today we've got Bronson Equity on the call. Bronson Hill's with us. He's a general partner in over 2,000 multifamily units. Those are valued at over 200 million. He's the host of the Mailbox Money Show, where he breaks down the investor mindset and how he's personally raised over 42 million for real estate in his private equity deals. He's also the author of the best-selling book, Fire Yourself, Replace Your Working Income with Passive Income in 3 years or less. I want to learn more about that today. And he's got his own YouTube channel and blog. Bronson, welcome to the show.
Hey, Brandon, really excited to be here. It was fun being on your show recently, and I'm excited to have another great conversation.
Yeah, no, it really was. So for those who are listening here, we were talking yesterday about how, you've got a similar background to me, actually, doing some medical device sales stuff. We talked about that. How did you get into real estate?
Yeah, so I've always thought of real estate. People I know that have been wealthy, real estate is always something we know we should be doing. And so I bought my first house at 26. Did some other things for a while. Years later, started buying single family houses. And I realized I wasn't getting to where I wanted to go financially as quickly as I wanted to. So I had, a mentor. There's a saying, when the student is ready, the teacher appears. And so I was ready for it. And there was a relative of mine I hadn't seen in a long time who said, "Why don't you do apartment buildings? Why don't you buy multifamily?" And I said, "Well, I don't have the money." He said, "You can raise the money." So I learned about raising capital and just, kind of one foot in front of the other, started a local meetup here in Los Angeles, California, and just have been able to have some great experience in apartment buildings and other types of investments. And now we just help people to create cash flow, reduce, taxable basis, as well as grow their wealth. So it's been fun to be able to be a part of this.
Yeah, that's quite the story that you just condensed right there. You got over 2,000 multifamily unit. It's like, hey, the when the student's ready, the teacher will appear. So walk us through like those first days. Like, how did you get into doing apartment complexes, and how did you transition out of your W-2 job?
Yeah, that's a good question. So, I don't know. When I first started, there's a difference between being a expert in something and being a leader, right? So a leader, I started a local meetup on multifamily investing when I didn't have any multifamily apartments, right? I just simply started a meetup because everything I was reading was saying, well, start a meetup because you'll meet great people, whatever. And at the
What
first
what
meeting,
year was this? Real quick, what year?
this was 2018.
Okay.
Fall of 2018. And so I went to somebody who was successful in the area who had a meetup, a really great meetup. And I said, "Hey, let's do another meetup and we'll brand it the same way, but we'll start a multifamily one. And you just show up and I'll do all the work." And she's like, "That sounds like a great idea." So we had 60 people at the first meeting, and we promoted it a lot. And then somebody showed up at that first meeting and said, "Hey, I do one of your deals." And I was like, "Are you talking to me?" Like, what's this? But I have a sales background, right? So I was still doing my medical sales. That's my background. I was medical sales for 10 years. So I kind of was like, "Oh, well, let me get coffee with this guy." So I got coffee with him. I ended up introducing him to someone else who had a deal at that first meeting who was looking for money. So that's capital raising. You're simply connecting people that have money with deals that look attractive for them. And that was my first $100,000 that I raised, right? So the hardest part in this business is getting from zero to one, right? Getting that first little bit raised, getting the first deal done, finding that first thing and actually getting started. Because then it goes from you being a tire kicker to you actually did something. So that's how I got started. And then about 6 months later, I'd been putting out content and trying to figure out how am I going to grow this. I wasn't really getting a lot of traction. I approached somebody who was a leader in the space who had a lot. They were teaching people how to raise capital for multifamily deals, and they're a big name. And I basically was at a high ticket event, a mastermind. We were talking about a little bit earlier. It was a mastermind type event, and I said, "Hey, how is it going in this area of you guys actually raising capital?" And so again, they would teach people to raise capital, but they weren't actually raising much capital at all in their own thing. And so he said, "Well, this sounds great." So I basically created a partnership with him, and while working my full time job, I basically had 1,000 one-on-one phone calls or Zoom calls with investors over the next 18 months, right? So I was doing it at 6 in the morning. I was doing it at lunch while working the job in the car, whenever I could do them. Sometimes take a Tuesday off and stack 20 calls. And then we raised and these were his investors from his list. And so I helped him do this. We raised $15 million together over the next 18 months. And I was able to leave my job about a year and a half, 2 years after that. So it was really amazing that just being around people that are doing big things and trying to find a way to add value was an incredible way that I found to open up doors for myself as well.
So he had a list of, I mean, it sounds like a lot more than 1,000 investors, but you pulled 1,000 Zoom calls and or phone calls from that to help raise capital.
Yeah.
Holy cow. So he just had a list of like phone numbers and emails, and he's like, hey, I got this deal. Call these people, set up the Zoom call, and try to
Yes and
sell
no. I
it.
mean, so what he did, he would pay for a lot of Facebook ads to sell his mentorship on how to raise capital, and he had a really great podcast. So he had all these leads, he had all these people coming in, and then, but I knew like this relative of mine was high net worth, tens of millions of dollars. He would listen to this guy just because he liked his stuff so much. So I knew this guy was legit because again, I'm new to this industry, but my cousin who he's been helping me said this guy's really great. And so basically, what we would do is on his podcast, he had a top podcast, and I would just say, hey, just mention that you also, if you want to join our deals, go to this website or follow this link, whatever. So we get leads through that, or we get leads through him just talking about what else we were doing. And so I would take those calls, right? So I wouldn't be a cold calling. Some of the best marketing is not like somebody asked me, I was like, now, like, how many calls do you make when you have a great deal? I was like, well, I don't make any calls. Like I try to set people up that, hey, we have this investment
I
club.
see.
Here's what we're doing. And then when we have a deal, they're already kind of teed up and ready to go.
Yeah, okay. They were booking discovery calls to learn more, and you were taking those
Correct.
discovery calls. Okay, so I
Yeah.
mean, 1,000 calls. That must have been a monster podcast because that is a lot
Yeah.
of discovery calls to that. And over what period of time?
Over 18 months.
18 months. Wow, 1,018 months. And so that is what allowed you raising that $15 million to ultimately like quit your job. So how did the partnership work? He's like, oh my gosh, this guy's just really good at closing investors. Like I need to bring him and make him a partner in the company. Like what made
Yeah.
you not just change and be like, hey, I'm going to go be an employee for this guy? Like you obviously had to negotiate some kind of partnership at that point.
Yeah, well, I mean, at the time I was making 200K a year doing medical sales. So, and I had a good job and I didn't, I wasn't like, hey, I'm ready to leave right now. I'd like to leave because I didn't like the grind of it. A lot of people, when I wrote my book, Fire Yourself behind me here, where it's like doing something because you have to do it. There's a difference between that when versus you have enough and you're making enough income that you don't have to go to work, right? That's when you're free. So I wanted to create that. And so basically I went to him and I said, well, I just started talking about, well, how's it going in this area? What's happening? What if you had people doing this or this? And I wasn't necessarily thinking I'm going to necessarily join his team or do it. I actually was a little disappointed initially because I wanted to build my own thing, but it opened up all these doors and I learned so much and it was great. So I think, for me, I think, what the partnership really, we had a percentage that, I would get a certain amount of ownership based on the people that would come in through his network. I also, some people from my network, which I got a certain level of ownership through that. And so, I made a lot of money over those couple years and I got a lot of great experience. I kind of got paid to have like an internship and kind of work and help. So I'm really a big fan of that. You can go pay for a mentorship, you can pay to join a group, and there's nothing wrong with that. But I was basically getting paid to kind of learn how to do this thing and get an inside track on it, which was incredible. So some of it was timing, some of it was being available, some of it was a lot of things, but it really taught me a lot. So then when our partnership ended, because they realized how much money they were paying me. I mean, some of these deals, it was like we raised $8 million in the last deal in like 24 hours, right? So they were giving me a certain amount of this just from, that. So they said, man, we could hire a full-time person and pay less, than what we're paying Bronson on this. So I don't blame him. It actually kind of kicked my butt to get out there and start doing my own thing. But some of the best experience, I just had a conversation with a friend last night who wants to get more real estate. And I was like, well, if you go to someone who's a valuable person, there's a quote that says, make yourself valuable to valuable people. Right. That's a Jim Rohn paraphrase, the motivational speaker. And it's the idea if Brandon's doing something amazing, if I can just find a way, not just to go up and say, hey, Brandon, how can I help you? Which is not really a great question, but it's like, hey, how's it going in this area of you raising capital or with you finding the deals themselves? Or is there a way that I can kind of come in and add value and something very specific? Then it might be like, huh, that's really interesting. What would that look like? Right. It wouldn't be overhead for you. And if it could help you expand, there's some opportunities there. But a lot of great things come from partnerships like that, where someone says, hey, I'll come and basically work for free. And if I can create value for you, can you cut me into this?
Yeah, it's huge. That's the key is figuring out how to create that value. And a lot of times, just because you go work for somebody for free doesn't mean you're creating value, right? Like there's time
Yeah.
involved in training you and teaching you and all that. And sometimes it's still a really good trade-off for you, even if you're working for free for them.
Yeah.
Okay, so what did the next leg look like? So you started your own private equity firm when they realized, oh my God, this guy's performing, he's making an absorbent amount of money. We need to hire this out. Like, what did the next thing look like?
Yeah, so at the time, I was hoping we would just scale up even more and more, but they're like, yeah, we want to kind of make a shift. So I was obviously disappointed, but so I gave it a good month or so, and then just kind of figured, okay, I'm going to start my own company, Bronson Equity, and I'm basically going to use some of these principles and do some things that I've been doing, provide my own flavor on the educational side, and then I just I kind of started one thing at a time. It actually was a little daunting in the beginning. I didn't see myself as a tech person, right? Like, how do I create a website and how do I start these automations so that somebody signs this, fills out this form, and they get booked on a call, and just all these different things that I'd seen. So I had to learn all that, right? And so one thing he taught me, the guy I was working with, was if I learn it, I can teach it, right? So I have all these SOP, or these standard operating procedures, right? Of how do you do this? Here's how you send an email. Here's how you book things online. Here's how you change the website. And I kind of learned all that stuff. And it was a little bit of brain damage, but I realized when I learned that, I could teach it to someone else. So I hired a VA, even while working full time. I was still working the medical sales job. So I did that for about another maybe 10 months. And during that time, I was just building up my content, the educational platform, started kind of a monthly webinar series. And then I would just get people that were interested. They're just interested in hearing about what we're doing. They set up calls. And then eventually I was able to leave. I was able to say, okay, I think it's time. I can go off and do my own thing. And I haven't looked back. It's been about 4.5 years. So.
Yeah. Well, yeah, you missed the medical device sales industry.
I don't. I miss the extroversion of it, of being out and meeting people and kind of the bustle of it. It's kind of fun. But I don't miss the grind. I mean, and we have that in common, right? Your medical sales background. It's like, you do great and you blow your number out of the water for the quarter, and then you get a slap on the back and says, great job, Brandon, you go out and do more next quarter. And so I felt like just like, a number, and I was just kind of being ground into nothing. And I think a lot of corporate people can relate with that, or anybody who owns a business, they can just feel like you're just grinding this thing out. And the thought of doing that for 20 plus more years was just felt like soul sucking to me.
Yeah. What was the so pivot point? So you were working your medical device sales job, established career, was working part-time with this other company, killing it. They said, "Hey, bye, you're too expensive." So you started your own thing. At what point, what did your real estate business look like where you could actually quit your job? Like what was your assets? And I'm assuming it was all multifamily, so I'm going to use the word. What was your assets under management? How much cash flow was it generating? Because a lot of people get really scared to
Yeah.
make that transition, especially when you got, a family to support.
Yeah. No, that's the tough part. When do you quit? And when do you fire yourself? Some people like have no money and they take out debt and go do a coaching program. And then like, I guess some might make it, but it's a lot of risk, right? Versus some people are like 2 months short of retirement. They're like, yeah, I quit my job, whatever. You're like, well, you were right there. So I think knowing when that time is that you're going to leave is challenging. For me, I basically had replaced my the first level of financial freedom is replacing your living expenses. So I feel like I live pretty simply. About 6K a month was kind of enough for me to cover my basic living expenses, including where I live, my car, my insurance, my relative travel, whatever. I'm not a super fancy guy, and then to replace 200K, that was a little bit more. But I got to where I was making more money in the real estate, but between acquisition fees and then the cash flow, I was making more money. I have to go back and kind of calculate what that was, but I was making more money in that than I was making my medical sales job. And then, the last few years has been challenging. We've had some things that cash flow that was really great in multifamily has gone away,
Disappeared.
and some of those
Mhm.
deals have struggled. Or we've had deals we've made a ton of money, we've lost money, right? So I've had to kind of wrestle with that and then shift into, okay, now these days what we're doing is a lot more cash flow related stuff. So whether it's oil and gas, that also helps with taxes. There's a way to reduce ordinary income taxes or any type of taxes through oil and gas investing, which is pretty amazing. And then there's things like debt funds and other things that are safer as far as a real estate investment, but they provide cash flow. So I've realized a lot of money someday is great, but it doesn't really help me today. It doesn't help me pay the bills today. So I love getting cash flow, building up cash flow, scaling that up. But yeah, I don't think there's no like real great time to, hey, I'm going to leave the job now, whatever. But I think in general, if you can replace your living expenses, that's kind of step one. And then if you can build on that for your cash flow, that's super helpful.
Yeah, and that's one of the things that we talk about in our land development accelerator program is like you got to have the cash flow. You got to figure out when you're doing these development deals. That was the biggest mistake we made when we first started is we just shoved all the profit on the back one, and we'll just be a true fiduciary and just starve ourselves for 2 years while we do these deals, front all the overhead, and we're like, oh yeah, that
Right.
business model just doesn't work. You've got to figure out how to create that cash flow through the life of it. So I know that you're well diversified in your real estate portfolio and your investing portfolio. Where are you seeing the investment opportunities and where are you guys focused the next, and
Yeah.
let's call it 20 for 2026 at least?
Yeah, yeah. So we're excited about a few things. I mentioned the debt funds. We find that today, the thing that lacks for a lot of real estate, particularly multifamily or most real estate deals in general, it's hard to find that cash flow. So that's where we've shifted into become kind of instead of on the equity side where there's higher returns, there's also higher risk. The debt side, we're seeing, for a lot of people, 1 to 3 year terms paying annually around 10 to 15%. And these are first position type notes of small commercial real estate with an established lender. So we like that. We like the safety of it. We like that, it's asset backed. We like the history of the lender and we like just the steady cash flow, the monthly cash flow. So we like that. We also really like, we have a little bit in the space. We've done one development in the space, but senior housing, we feel like senior housing is a huge area of growth. It continues to grow. People get older. There's a lot of demand, a lot of markets for this, whether it's smaller, kind of, 4, 5, 6 bedroom places, or it's larger big box type assisted living facilities. So there's different things in that space we enjoy. We love oil and gas. The price of oil and gas is actually pretty low right now. So we actually feel like it's a great time to get into it. And then over the next few years, we expect that oil and gas prices, as the price of just about everything has risen substantially, that will continue to rise. So those are a few things we like. And then we have an industrial fund we're involved with as well. And then we have a number of things, but in Altadena, we're rebuilding after the fires with some offsite built and manufactured homes, which is exciting as well. So we've got a lot of things we're into, but a few of the basics, really, the debt fund and the oil and gas have been kind of staples for us.
Yeah, I know we talked about the manufacturer. I want to touch on that in just a second. But as far as the debt fund goes, what are y'all raising money at? Because it's an arbitrage, right? You raise capital and then re-lend it out. I'm assuming that's the model. What are you raising money at? What are you lending at? And then is there a specific type of asset that you're lending against? Because those interest rates for a cash flowing asset like commercial or single family rentals, that is extremely like they can't handle almost a 10-15% interest loan. So what are you lending on?
Yeah, so it's small. It's kind of a unique product, but it's small commercial real estate. So this is, under 4 million of total purchase. It's 50, 60% loan to value. And it's basically bridge debt. So it's people coming in that want to close. The challenge, I think, with larger commercial stuff or even smaller stuff, it can take sometimes 3, 4, 5 months to get a loan. It takes a while. So if somebody's like,
Yeah.
hey, they got a motivated seller, distressed situation, something can close in 2 weeks or in 3 weeks, like we can come in and do that. And so they're paying, often 13, 14, 15% plus points on this, right? Because they know they're not going to have it for them. They're going to have it for 6 to 12
I
months.
see.
They have
It's
it for a period
short
of time.
term.
Shorter term debt. Yeah, but there's a lot of demand for it. And so this lender is a 25-year lender, lots of history there. And they're just really, really good at this specific strategy. And so, but we love the fact that it's first position. So, primarily the notes in there are first position. They're originated by our lending partner. And so that's kind of what gives us some advantage, that if for some reason they don't pay, we just take over, and we have the history that it's been a really solid history. So when somebody invests, it's not like they're investing in one note. They come in through a note, but they're diversified across a pool of them. And so we have this long history. And so again, nothing is in investing is without risk, but I think it's one of the safest investment risks besides a U.S. Treasury, a bank account, or a money market or something like this. Is a pretty safe type of investment.
I see. And you said you're working with a lender. So what's that relationship with you? So you're not raising this isn't like where you're going raising from private investors and relending it out. You've already got a lender in place and what you're
Correct.
just sourcing deals and getting a fee.
Yeah, so basically we just raise capital and then we've got the lender that does the work of, they've got more demand than what they can place and they vet those deals and figure out which ones are the most attractive, which ones they like the most, and then they'll basically place the capital of investor funds and then we get a split. So the investors will get for the longer term, for the 3 year, they get either a 9 or 10 pref, and then they get a split of the lender fees. So it's either 50-50 or 60-40 or something like that of the fees that the lender actually gets, right? So they're actually sharing some of that with investors as well. And lately it's been that some of those lender fees for these type of deals can be pretty hefty, right? So if you can get a share of some of those, that's how it brings the returns a little bit higher.
I see. Okay. So you partner with somebody that has the machine built essentially.
Correct.
Hey, we've got the deal flow, we know the underwriting, we get the team, but
Exactly.
we need more capital to be able to lend out. And you're that piece that helps feed that to be able to keep the machine going. And okay. All right. That makes a lot of sense.
Yeah.
Now, part of What I've seen especially be, lucrative is when you can recognize opportunities. It's one of the hardest things to do is just being able to recognize what's in front of you. It sounds to me, based on the conversation we were having, I think it was just yesterday. Wow, it's been a lot's happened since you guys have been busy. Is you're in this manufactured home space because you saw an opportunity in California, with what happened with the Palisades and some of these areas that fires just completely wiped everything out. Um, how did you see the opportunity? So you got the news about the fires, and then how did this business opportunity present itself? Like, when did the light bulb go off? If you could take us
Yeah.
back to that moment where you're like, there's an opportunity here.
Well, it's funny. I'm an idea guy, so I'm just continually looking at how do I, how do you find value? How do you create opportunity? So for me, where I live, I'm a couple miles from the fires. I have a picture I posted on social media where it's like from my house, you can literally see the flames from behind the house, and it's a mile and a half, whatever, behind me. But I left my house not knowing if I'd come back, right? If I'd be able to come back to a house. And so I had 7 friends that lost homes in the area, either this area or in the Palisades fire. And so but it's such a feeling like when you don't know your house is going to be there or not, and all the things you have, and just it feels very alarming. And so I started to think, what can I do? So I'm a big, some people love ChatGPT, some people hate it. I love it for ideation, right? I'm an idea guy, so I love it for ideation. So I started literally asking questions of like, what can I do with my background? I have some things in there about myself and what I'm doing currently, so it kind of knows, where I'm coming from. And I said, what are some ideas of ways that I could kind of help rebuild this? Because now it's going to take years. It could take 5 to 10 years to rebuild the city. Is there a way to do it faster? What could happen? And so I came across manufactured housing, and what I kind of thought of initially was like, well, like mobile homes or what are they? I guess this. And I realized, what they were making 50 years ago, because that's when they started making mobile homes. It's not the same. I mean, these things were like a piece of junk, and I mean, they were, no offense to anybody who lives in a mobile home, but like, they're like metal and they look like a box, and they just don't look that attractive. But they have
Yeah.
stuff now that looks all cool. They can do multi-stories and they stack them up and side by side. You could do these bump outs and all these cool looking kind of offset roofs and things. And so I was like, well, that looks really neat. And so I thought, well, what's a way that I could bring value? And the one thing that came up was to become a dealer for, this prefabricated or offsite build modular and manufactured homes. And so I discovered that they have these really nice units. They can build them in 7 days in a factory, and you literally just like they push them down the line in a factory. In 7 days, this 2,000 square foot house comes out, right? Or you could do an ADU, you could do a large. People don't realize you can actually do 3,000 square foot homes like this, right? And you'd walk in and you'd never know. I mean, they have custom granite countertops and backsplashes and really high end appliances, and these are basically set on a permanent foundation, and they appraise the same as traditional homes. So it's kind of amazing what's available now. So I realized there's a big advantage there for us is that we can come in, we can build way faster. Actually, even from the approval process, California is known to be very difficult to build. But because these are federally and state approved, we can come in and basically all they do is look at your plans and say, well, here's your setbacks and here's the grading of the land, whatever. And we basically come in and it's already pre-approved, right? So we basically bring them in. And so it's just much, much faster. And so they place these homes, and once the foundation's set up, they place them in one day and just kind of attach them. And then you do landscaping and you're basically done. And so I just thought, well, the idea is that the cost is for us, which is higher than elsewhere, but here it's way cheaper, $300 a square foot to build, whereas the stick build price is $450 to $650, and that doesn't include your permits and other things. But it's about 50% less or more. So I realized we can do it faster and we can do it cheaper. So I want to do one myself. I want to do an owner builder one, live there, and then we can help other people do it. We can also do kind of an investment group where we bring people in and we build a number of these. So, but I'm very excited. I'm very excited to see what we can do, and we're definitely in process with it. It just took a very long time to get set up.
So what's the business model? Is it selling it to people that want to buy them, or are you spec building these homes? You're going out acquiring the land that's been burned down and building a spec house on it. Like, who's the end buyer here?
Yeah, so the answer is yes. Our plan is to do both of those. We initially
Mhm.
thought we were going to spec build, 4 or 5 houses and just like try it and see how it goes. And the problem that we're facing right now is that we're a little early in the cycle where, if our build cost right now, we know what our build cost is based on estimates. It's about the same as what older inventory is selling for here. Stuff that was built in the 1950s, 1960s is about the same cost. So the problem is when you don't have new inventory, nothing's been built in the last 12 months. They're just starting to have some new ones be built. They're just starting to sell. So once those comps are out there, they'll be able to comp against those. But once an appraiser can only comp against what's there. And so that's been the challenge. So we thought, okay, well, let's actually work on the dealer side where we're going to help other people build, because a lot of people are underinsured. You've read about, people were wildly underinsured. So if you're underinsured and you want to rebuild, it's going to be really tough because you just don't have the money for it, right? So this is a cheaper way to do it. But then I thought kind of the happy medium for that and the way for us to learn the most about it is for me to build one unit myself, live there, and basically do private tours. Right. So then I can say, hey, we've done this. Here's what it is.
Yeah.
Here's the process. Then you don't have to convince people that it works. You just have them walk through your house and you show them, here's what it is. And then also with the spec side, it's like, well, we've actually done this. We actually know how to do it. We have other relationships here, and it's much less risk for investors. So there is kind of a synergy to both of those. We thought one was going to be in the other. So it's kind of yet to be seen. I think that the happy medium is we'll do it ourselves, and then we'll start looking at doing the investor side or helping other people do it, or both.
Yeah, because that's one of the challenges is people have that old stigma behind it. Modular immediately, oh, cheap, fabricated, crappy home. And it's amazing what they're doing, right? They're
Yeah.
manufacturing them. I mean, you got to think like, what's the ideal condition to build a house? It's not what it is right now.
Yeah.
Like they're doing it in factories where you've got the same people making the same thing over and over again, right?
Same
It's
thing.
like a conveyor belt, or a
Yeah.
what's it called? Ford guy invented the assembly line, like that.
Yeah.
That's how you want construct. You want consistency, and you don't have that in today's houses. So there's and the speed, yes, is a huge thing. So there's definitely, I think, an opportunity. That's where the industry is going. Construction, we have Amazon packages arrive on my doorstep within 2 hours of me ordering them sometimes. Groceries arrive on my doorstep same day. We still build houses the same way we built them,
Yeah.
sticks and bricks. It's 100 years ago.
Yeah.
It's crazy. Like the construction industry just is not innovated at the same pace. I want to talk a little bit about this mastermind community that you created. Tell us about that and who you serve.
Yeah, so we, I've had the conversation out, the ability to speak or the opportunity to speak with over 2,500 high net worth investors over the last, 5, 6 years, and just having conversations, realizing they're very smart people. A lot of people own businesses or professionals, doctors, lawyers, different types of business, but a lot of people are very isolated. So the challenge is for a lot of investors, they don't really have peers, and the challenge is everybody in finance wants to sell them something, right? Everybody's got a deal, everybody's got a service, everybody's got something they want to sell them, and myself included, right? I have a deal, you have deals, so and we're excited about it. But for them, the most transformational relationship is another passive investor who's like them and maybe a few steps ahead. Maybe they've invested, in passive investments over the last 10 years. They've invested in your deals, Brandon, or they've invested in my deals. And they'll say, hey, I really like working with these guys, or hey, I'd watch out, I never work with these guys over here. And so we have a group like that. People actually come, we have some guests come in, but typically people pay to join the group, and then we help support each other. And so we're able to kind of like provide, somebody's looking to grow in this area of their business or their life, or with their investments. And it's just such a great environment. And so we don't really pitch anything in the group except for the group itself that people should join the group. But it's been really fun. So we've been going for about a year and a half. We just had 30 people at a luxury hotel in Southern California. We had just some amazing speakers come in, some amazing guests. And I think the big value, we did some kind of hot seat and masterminding as well. And it's just amazing when you're in the room like that. And that's where those partnerships happen. That's where I approached a guy myself where I was like, hey, how's this going in your business and how can I help? And
Yeah.
where it led, I probably made $1 million off of that, plus all what I think stuff I learned to be able to launch my own business, right? So you can't underestimate the power of you're the average of the 5 people you spend the most time with, right? So if you want to change that, you've got to get in rooms with people that are smarter, wealthier, and just have are way ahead of where you are.
Yeah, there's so much value that's created when you can get like-minded people around to discuss what's working and not working in the business. I've been a part of a mastermind, sometimes up to I realized 3 was kind of my limit. It was a little too much. I was traveling like every other weekend. I was like, okay,
It's a
this is
lot.
too much.
A lot.
But I'm in a mastermind right now, and it's a game changer to be able to talk to another business owner who might be a couple steps ahead of you and figure out what the path looks like, what not to do, or hey,
Yeah.
what I've found, Bronson, is being successful in whatever venture you're in has a lot less to do with making more right decisions because I'm like, oh, good decision, good. I just need to make more decisions, more better decisions. It's much more to do with avoiding bad decisions.
Yeah. Yeah.
That has completely reshaped. I used to be more, revenue and good decisions in first position, where my how I think through things now, it's more risk mitigation. It's like, how do I avoid the negative things? I might pass up a phenomenal business opportunity because maybe that person is just not the right core values as me,
Yeah.
whereas in like the past, younger Brandon from 10 years ago would have just looked at dollar signs and be like, oh yeah, let's jump in, let's do it. I can help you here. So,
Yeah.
how have you started to, with the formation of this mastermind, like how have you started, how has that reshaped how you think about things? Like some of the biggest ways that have maybe um reframed your mental constructs from the
Mhm.
mastermind.
Yeah, yeah. The masterminds are interesting because the term mastermind, it comes from Napoleon Hill's book, Think and Grow Rich. And we have the same last name. We're not cousins. We probably could be. But just the idea of like when you bring two or more people together and it's like you create a mastermind. And there are people that you go back to like Henry Ford and Rockefeller and these different guys, they would actually meet together every summer and they would get together and talk through things. I think there was originally this happened in England and they would have these groups of very successful people. If you look at them, they would typically have friends, peers, and mentors that would do this and help each other out. And so it's just something that none of us we've got it all together, right? None of us, and you've ever met somebody, like I know you probably met people like this, and I have too, and even our listener, like you meet people and like somebody's just absolutely crushing it in their business. Like they're making like millions of dollars a year. And then you meet them and you're like, they don't really seem that impressive. Like they're just kind of like regular people. But
Yeah.
probably what they did is they just continue to invest in themselves. They continue to get around amazing people. And I can't tell you like just the stuff that comes out of like from this last week. I learned just from being around people, and some of it you can't even fully put your finger on it, but it's like I learned what people are working on right now, what they're excited about, what they're avoiding, what the mistakes they've made. People talk about wins and losses, right? Here's what I did this deal, it ended up failing, or it was a scam, or like, well, what did you learn from that? Okay, well, here, let's talk about that, right? So, and I think what you shared too, it's not just the things that we do that are successful, it's the things that you didn't do, right? It's the Warren Buffett rule number one is don't lose money, right? And Warren Buffett's lost money. Everybody that I know that's done investing for a long time has at some point lost money. And so I think that if you can take those lessons, they said that a wise man learns from their own mistakes, but a genius learns from the mistakes of others, right? So it's like if I can fast track and just simply get the mistakes that you've made, or other people have made. And I'll give another example of this. We have a guy in our group that's about 60, super high net worth. I mean, tens of millions of dollars, done everything in real estate and in life you'd want to accomplish. And he just loves giving back to other people. And he also is asking the question, like, what's kind of next for me? What's kind of what are the next things I want to create for myself, right? And so, there's family, there's legacies, other things like that. But I love that shift that happens where people have enough and more than enough. Then they start to say, well, what can I do to give back? How can I help others? And so there's that kind of coaching, mentorship, kind of peer mentors that happens in that group as well, which is really fun.
Yeah, very cool. Now, if somebody wants to learn more about you, learn more about your real estate opportunities, or learn more about your mastermind program for high net worth individuals, where can they go?
So they can reach out to us on social media. We're on all the social medias. The best way, I think, is I have a gift for your audience. It's a guide of my three favorite cash flow investments for 2026. And if you text the word cash flow, just all one word, cash flow, to the number 33777, you just text the word cash flow. We'll send that to you. It'll ask for your name or email, and then it'll kind of keep you in touch with what we're doing. But we're really excited about that guide and love to connect with anybody about investing.
All right, cool. Well, hey, go check it out, Bronson. It's been a pleasure. Thanks for coming on.
Thanks so much, Brandon. It's a pleasure.